Foundation Capital general partner Joanne Chen joins us now. Venture capital supply is there for these founders and for these startups. I guess what was more interesting at this juncture is like the decision to not invest in something, to be disciplined. How real is that struggle?
Very, very real. Thanks for having me, by the way.
It's great.
We are a very early stage venture capital firm, and early stage means different things for different people.
It does.
For us, it means investing in founders that have an idea, that have a lot of ambition. They don't necessarily have customers or a product.
You don't want to see the business plan necessarily.
We're investing in people at the very end of the day. And we have done this over and over again over the last 31 years of the firm's history. One of the examples is Cerebras, which went public about 3 months ago, which we actually incubated in our offices back in Menlo Park. And at the time, Cerebras had just a few co-founders, an idea, and an ambition and a prediction that the AI market was going to explode.
Maybe it's not the same field of technology, but like an interesting example that I find is humans and. So let's call it a Neo Lab or something like that. It was just 4 founders able to raise hundreds of millions of dollars at multi-billion valuation out the gate.
Right. And that's an interesting phenomenon because now we have examples of very large outcomes, right? As AI has changed and become much more powerful as a technology, there is an impact to organizations that could create a lot more revenues eventually. And so investors are looking at OpenAI and Anthropic as examples of, hey, maybe we can invest at these valuations and have them become this large. And therefore, the entry valuations or the appetite for these entry valuations have gone way up for some of the types of companies. I think what's dangerous, though, is the neolabs don't have commercial traction and possibly not for a long time or for even forever. And I suspect we're going to see that play out over the years. Some are going to have very large scalability, and others may end up not being able to raise capital in the future.
So how does one do due diligence on an individual or a few individuals who just have an idea?
Yeah, it's not dissimilar from how do you recruit someone awesome, right?
Okay.
You look for exceptional people, right? If you think about the Bay Area or even San Francisco, there are fewer than 1 million people in San Francisco, and yes, so many companies are started here. We look for exceptional people, exceptional founders with big dreams. Oftentimes they're technical, oftentimes they know how to sell, oftentimes they have a very strong growth mindset, because as the companies grow, the job of the CEO changes, and the founder has to be able to become a CEO and also evolve as a CEO. So we look for exceptional people at the end of the day, with the understanding that they will become someone different. It's hard to look for exceptionalism. There's lots of ways to do that, and for each of us, we have different ideas what that looks like for us, and I think this diversity actually gets us a really interesting portfolio of different types of backgrounds.
I'm really interested in how you're investing for the world you foresee. You published this in March. I'll get shouted out for doing that, but The Great Reorg, A Human's Guide. And the conclusion of the 16 pages is that AI won't simply replace people, but it will reorganize companies. And as part of that, you paint a picture of a world where there are smaller teams, fewer specialists, AI agents doing a lot more work. That seems a little contrarian to me because it's still net means less people.
I would disagree with that because I think what AI is doing today is removing bottlenecks in organizations. And in order to remove bottlenecks, we do need possibly fewer teams to start with. However, if you're an ambitious entrepreneur and you're thinking, hey, I can build a $1 billion company with 100 people, why not hire 500 people and build a much larger company?
Right.
It doesn't stop there. I think the misconception is that AI is just about job automation or job loss. In fact, I think what's going to happen is AI is going to create a lot of use cases that we haven't yet thought about. Think about the early days of mobile. I think the first mobile app that I used was this beer drinking app where I could tilt my iPhone and the beer would come this way. And yet, 5 years later, Uber came about, and it really changed our worlds. Right. And I suspect we're going to see the same things with AI use cases that are going to be transformative to us.
So you talk about high agency, basically being able to take an idea and actually do something with it. Build, execute it, rather than sort of debate the idea. Do you have some sort of evidence of that in the portfolio since March or otherwise?
One of that is that we're seeing helping younger and younger founders build big companies. And I think that's possible because AI can teach someone who knows nothing about a subject and get them up to speed very quickly. It can do things like guide how you're going to fundraise, come up with your marketing launch plan, help you with interview questions, help you prep for a Bloomberg TV interview.
So this is interesting because away from the investor side, the operator side of being a venture capitalist, you would pitch those services to a founder as well.
We do, and we help with founders with very specific things to help them go through the 0 to 1 journey. Right? You can imagine having no customers, getting your first is a big deal, or not knowing how to fundraise and doing that for the first time. And we're also leveraging AI within our organization.